So welcome you all to the Thursday, fifth next edition of the knowledge session on the best AML screening practices in India. And today I've been joined by Abhishek Bali, who is the founder and CEO for ZIGRAM, one of the leading data-led AML platforms. So he will talk about that organizations. So we'll just get started. So today agenda is primarily again, look at that. We've been seeing the continuous updates coming from the RBI on the master direction on the KYC. So we'll touch upon some of the elements and the rationale behind that, those elements coming up. And also we'll touch upon some of these key areas of the elements of the KYC guidelines updation, which has come over a period of time. Then we'll get into understand from Abhishek that what are the best practices of screening, especially when you talk about the name screening and how do you leverage the name screening platforms? How does it helps to enhance your AML compliance capabilities? So before that, just quick introduction from my side. I'm Shashank, Shekhar. Many of you may be coming for the first time. I could see that quite good number of new names coming up. I'm very happy for that. So I take care of the consulting at the Digital Fifth. So earlier I have worked with L&D, Infotech, and Wipro, primarily in those cybersecurity, compliance, the governance areas. And then I moved into DCB, where I was responsible for managing the entire technology governance for the bank, as well as then continue to drive that infrastructure, the digital banking, open banking. So that's where I have a good exposure to working very closely with the compliance team on the various RBI regulatory compliance, right? So with that, I'll introduce Abhishek. Abhishek, if you can just quickly introduce yourself and just talk about the ZIGRAM, what it is.
Sure. Thanks a lot, Shashank. Hi, everyone. Good evening, good afternoon. To quickly introduce myself, my name is Abhishek. I'm the CEO and co-founder of ZIGRAM. ZIGRAM is a RegTech company which focuses on 3 areas: anti-money laundering, financial crimes compliance, and emerging risks. We're now about 5 years old, and we're one of the few companies in the world in this space which offers the integrated RegTech stack, which means we build our own data, we have our own technology, and we also offer support. The company has now about 500 full-time folks. Our work covers across 240 countries and jurisdictions across the world. We also have recently received multiple certifications from Great Place to Work, including being one of the best places in India for women. And not to mention that we are also now in the shortlist for the top 100 places to work in India. We are also recognized as the top 10 startups in the country in 2020 by LinkedIn. And as an organization, our focus is to solve the problem around AML, financial crime, and emerging risk problems for our customers. My background is that I worked for about 15 odd years in the consulting space before I set up the company. And I worked for companies like KPMG. I worked for companies like PMR Advisors, Dun & Bradstreet, Axis Bank. And a significant amount of my focus has been on the anti-money laundering space, where I've done implementations for banks and financial institutions. I'm ACAM certified, and I also sit on the advisory board of ACFCS in India. So that's quickly about me. Over to you, Shashank.
Thank you, Abhishek. Thank you. So I spoke about myself. Just quick intro about the Digital Fifth, who we are. So we are one of India's first fintech and digital consulting, very focused on the BFSI industry. We have worked across with the various fintechs, startups, helping them into their growth strategy, the product strategy, as well as we've been working a lot with the banks in their digital transformation exercise, be it on the completely managing their programs, driving their digital strategy, building digital journeys. So that's where we work. We work lots on the embedded finance because as we keep on talking about it, that every company will become a fintech, and that's where the role of the AML platforms and all this thing continue to go increase, right? So we were working with money control, helping them into plug in the financial services on their platforms, from design of the product to the journeys, and also integrating with the various backend technology platforms. Similar work that we are doing the Tally. We have also worked with the various government enablers like NPCI, Mumbai FinTech Hub, and then we do lots of the B2B training where that you can see that training around the digital banking, digital lending, digital payments, and all this thing that we've been doing. Closely that we work very closely in the financial segment with our network, where that we almost work with 80,000 followership that we're running on the LinkedIn and the various platforms, 20,000 emailers goes. And we're primarily connected with large CTOs across the banks and the founders and the co-founders. And we believe in a strong content development where that we continue to release our weekly newsletters and the various annual reports. That's we continue to do that. These are just a snap of our services that we provide the digital advisory services ranging from the benchmarking, building the journeys, managing the entire programs, setting up the digital strategy, and helping the banks into implementation of digital strategy. A lot more work we do on the open banking, where that either designing the open banking strategy, performing the API benchmarking, API platforms design, lots of work on the research and content, fintech and startup advisory. We do lots of work on the security and compliance services, where that any regulatory guidelines comes, we help the banks or the fintechs to comply with that, especially in the technology segments. And then we also help into the companies in performing to tech due diligence to assess that where they are and where they need to go. So that's quick. And the last bit, again, and thanks to all of you guys that who supported overwhelmingly our Bharat Fintech Summit first edition this year. Next year, again, we are coming with our second edition of the Bharat Fintech Summit on 7th of February. With this, we'll just get started. Again, so this is the agenda I've already spoken about. So next 10 to 15 minutes, I'll just talk about that. What are the changes has come into that? How does it impact the overall AML landscapes, right? And then Abhishek will go into talk about that. How do you drive that entire the compliance aspect, especially using the name screening mechanism? So RBI is the, I know you know that primarily the regulated bodies responsible to ensure that entire the compliance to the PMLA with respect to banking sector is being adhered to, right? And the first detailed guideline was come into 2016, and it can gone through the multiple amendments, right? And this amendment, the new amendment, which has also come in the same direction. I think if you try to look at that, now the first edition came in 2016 till 2023. We didn't have a much regular enhancement coming into that, right? First one, I think major one came into May 2021, and I think 2021 primarily, I think it was to response to the COVID, right? Where that it can facilitate the video KYC process to perform the customer due diligence. But look at this year, where that April, lots of the guidelines came enhancement on the video KYC, CKYC, and more on the wire transfer. If you try to go back and try to assess that what's going on and why the RBI has gone very tight on the KYC, I think it's led to the primarily the large changing happening and the supervisions across the globe with respect to FATF compliance, right? FATF compliance is continuously getting strengthened to ensure the money movement, the flow is get restricted towards the terrorist financing and all these things, right? So increasing requirement of FATF is leading to regulator across the globe to have a sustainable benchmark, right? And that's RBI is also trying to meet to the global standards and to continue to keep on enhancing. If you look at the overall KYC guidelines, it's not reducing, but it's continued to get enhanced. Sorry. And then October 2023, further it has been enhanced. One of the major elements which has been introduced, which primarily talk about the risk-based approach to enhance the video KYC. Before I go about and talking about some of the changes which have been introduced, I talk about like customer due diligence process, like which already trying to summarize some of the key changes has happened in the last couple of years, especially this year, right? KYC identifier using the consent mechanism as a part of the CDD, including the CKYC was identified. OTP with respect to only the mobile number of the customer can be given, right? And making a very stringent process about the change of the phone numbers of the customer, right? Which is also critical to the overall KYC, but also it's very critical to the entire the financial crimes or the fraudulent activities that we see. Further, it gone to enhance the due diligence process for the non-face-to-face customer process, like where that any remote onboarding can be used for the VCIPs, PAN number verification mandatory. I just don't want to go through the, but because many of you would have already seen that, but just wanted to go through that so that at least you know that what's going in the industry, right? Updation of the mobile number, again, it's very critical that where that says that okay, OTP KYC can only be done in a specific condition. It's limited to the certain time period. And also, I think first time in April and May 22, I will emphasize of the use of the new technologies, right? Primarily using the more on the AI and ML, right? And that's where when Abhishek comes and talk about session, you'll see that how this entire the use of the analytics has become so critical to the entire the KYC process. Okay, so periodic KYC updations. So this year, RBI felt the KYC updation has to frequency has to be done for the customer due diligence, and also ongoing demand for the ongoing customer due diligence, especially with respect to the transactions, right? And the frequency has also been defined, the KYC, that high risk customer once in a 2 years has to be done that, right? And then subsequently for the medium risk and the low risk has been put in place. So if you look at some of the critical ones which has come into the October 2023, like one is that lower the transaction threshold, like customer due diligence has to be done for any customer who is making a transactions of one time of 50,000 or accumulated related transaction of up to 50,000. So you need to have the mechanism to assess the customer profile, be it on the beneficiary side or be it the payee who is doing the transfer, right? Another very critical component, if you look at it, the way they have said that due diligence process has to be supported by the independent source of the information. What it is mean that you can't just rely on the information which has been provided by the customer, right? You need to look at the alternate source of mechanism where that you can go and validate the customer. And that's where again the name screening comes into picture, where that you go through the whole process of validating it with a different third-party sources, right? Some of this definition, what you say, procedural changes, like especially reducing the ownership percentage, like bringing down from 15% to 10%, again, is aligning with the PMLA guidelines. And also very important in putting an emphasis on to understanding the entity, the customers who is doing that, right? Ownership, what is the relationship, what is the nature of the business? Those are the very critical that how do you need to, regulated entity need to understand the customer more deeper, right? And that's where that you can say that, okay, where the source of money is coming, how the source of money is getting deployed. So that's pretty close monitoring nature that has to be established so that at least you can understand your customer pretty well. Some of this impact, what is the impact that it's going to have? Definitely, one is which talk about the risk-based approach, right? So you need to set up a very clearly define the risk-based aligned approach so that the KYC can be completely aligned to the risk nature of that individuals or the business customer that who are there, right? And adopting the technologies aligned to the risk. That's why there's a risk-based approach. So high risk, then high level of the technology intervention that you may need to deploy so that at least you can manage those risks much better. And that's where, again, the name screening mechanism will come into the picture, which has to be aligned that, okay, this is one of the measures that you need to use. And when Abhishek session will come, you'll get to know more detail about the name screening, right? Again, the impact, if you look at it, entire the process of the customer identification and risk profiling. So since you are doing the risk-based, you will also has to put up that entire the selection mechanism, that carefully choosing the source of the customers, understanding the dynamic risk profiling of the customers, right? Based on the customer behavior, the transaction patterns, and every element has to introduce and link to your risk so that continuous updation of the customer risk is being done, right? It's not left to that one-time exercise which had been done at the time of onboarding. Okay, he's a high-risk customer, so then accordingly you continue to operate. No, this year, if we look at it, very much emphasis has been put into the customer due diligence on an ongoing basis, especially on the transaction side of it. So not only that you are going to monitor the transaction part of it, but related to the transaction monitoring, you continue to look into the customer due diligence aspect also. So is the customer profile has got changed, the risk element of the customer has got to change. Definitely now, as RBI is emphasizing a lot more of the setting up the analytical capabilities aligned to the overall the AML, because one hand that you need to monitor the transactions, which is massive. If you look at it, because of the UPI and the digitization or all these things, lots of the transactions is and multiple interfaces. Transaction can be initiated from the any kind of the interfaces. So definitely it's required on a very heavy intervention of the AML capabilities, AIML capabilities. That's where the RBI is emphasizing. And continue to enhancing the reporting and the compliance burden, right? Because it will definitely have always any regulatory landscape come, it leads to the kind of complexities to report, as well as entire the overall compliance burden, right? So that's where that you will have a challenge. So these are like some of this impact that regulated entities will go through that. So meanwhile, I just request that everyone keep on putting a question on the question answers block. We'll keep on taking an intervention at respective places, and then we'll pick up the questions, or we'll take in a short, keep on taking short break, and then we may ask you to ask the questions, right? All these changes gonna lead to that entire the policy changes, and it's also emphasizing that entire the board approved policies has to be put in place where that it is aligned to the risk-based approach. So you need to go back and look at the policies, develop your risk-based approach and align your policy to that, right? Then putting the designated director and the principal officers that with whom the grievances can be shared, that who is compliance, who is responsible for the compliance, that has to be put. And these are the changes. It's not which has come in that October 23. I'm primarily talking about that overall, that last 1 year, that what are the changes have been introduced. Customer acceptance policies, right, where the customer is giving that very clear consent, putting the prevent customer identity matching with the sanction list. This is also very important, right? Because you need to check on this sanction list. Then suspicion of the money laundering and terrorist financing. That's where that the changes have been introduced, that any kind of the challenges has been observed or suspicion has been observed in the money laundering. This need to be, as a part of the CDD, you need to file a transaction report with the FIU NID, right? And then again, risk management, I've already spoken about customer identification procedures, that especially for the international money transfer, right? I think just to revisit that some of the changes which was introduced on the wire transfer last time, I think it was a major change which was introduced last year to plugging that and tightening that entire the AML control over this wire transfer related, like it entire the cross-border transfer has to be looked at, that who is the originator, who is the beneficiary. Then that the batch transfer has to also go through that entire the check. Major changes, if you look at it, which have been just slightly, where some changes have been introduced with respect to the wire transfer, the less than 50,000. If you're not account holder, then you need to do the due diligence. You need to check that, right? If the customer is not there, but it's trying to use the banking channels, right? And in absence of any account, unique transaction reference and traceability need to be put in place. So some of these changes were there. I just don't want to look into that, because critical component that we need to focus that how do you do the name screening to support the compliance process, right? Some of the additional changes, if you look at it from this change, that amendment which has come primarily from the requirement of establishing the PPL relationship, right? Politically exposed person, right? That's very critical. So you need to have the mechanism which is need to align your risk-based approach with when the customer is PEP, then how do you perform that entire the CDD process for that? And you need to do and perform the verification of the source of the fund or the wealth which is necessary, and also taking an approval from the senior management. So that's one of the major change. Identification of money mule account, as you know that some of these accounts which are just being used to manage the flow of the money, right? They may not be the beneficiary, but these accounts are being just used to manage that money movement between the two fraudulent parties, right? That's why RBI is trying to emphasize that such money mule account should be identified, right? And if any suspicion transaction has been reported, it need to be reported to FIUs. Continue to enhance the due diligence for high-risk countries. So where the money movement is happening. So cross-border transactions, while one hand the government is trying to push to that, expand the cross-border transaction, but at the same time also they're trying to intervene that it is not being used for any kind of the wrong transactions, right? Because FATF is primarily look at that entire the international money movement, right? And that's where being a part of the global framework, you need to support that FATF recommendations, right? So that's where that high risk countries which keeps on coming, you need to monitor very closely, and continue to with the guidelines of the Foreign Contribution Regulation Act, right? Where that any money is moving from as a contribution, you need to continuously monitor that. So these are some of the changes, but just wanted to bring all your attention that why the ML is so complex and why that entire so much of the guidelines keeps on coming. If you look at it, that AML laws, which has a reference, one is that definitely PML is the mother regulations which drive the entire regulatory guidelines around the anti-money laundering within the country. But there are many other regulations which touched upon that control requirement for the anti-money laundering, right? Be it on the fugitive economic offender list, foreign exchange, FEMA is there, which primarily money movement from the international transaction, black money imposition tax act, narcotics, income tax act. Every act has some element or others which primarily trying to manage that flow of the money, which is happen within the purview of the law, right? And also, since laws can't be imposed by the government, but there are regulatory bodies who are responsible to ensure that within that regulated segment, those laws have been appropriately been addressed by the entities who are participating into the whole industry, right? So RBI is primarily the key regulators when it comes to the AML, but you have the financial intelligence unit, which also keeps on coming, that EDs, right? You know that EDs also very closely monitor that, especially when it comes to the FEMA SEBI, economic offenses, being narcotics. So these are the regulated bodies also responsible to ensure the one way or other, ensuring the compliance landscape in the country, right? And just look at some of the snapshot in the recent past that, and which will tell you that, okay, why it's becoming more complex and why it is becoming challenging, because the RBI scrutiny is getting tightened, the penalties are continuously getting to increase. Some of the noteworthy, I just don't want to get into that, picking out the names, but you would have seen that those kind of the compliances is coming up, right? And then just trying to plot on the timeline and scale and all this thing, you can see that I think the 2020 onwards, that some of these cases has started increasing, right, post-COVID. And now 2022 see a massive upsurge. I think 2023 is also almost near to that, and still we have 2 months to go about it, right? So that's where I think, and on overall global level also, if you look at India, is almost third highest number of AML actions. Now, in terms of the money, it may not be very high in terms of the penalties, because international the penalties, each single of the penalties may go very high, right? But it's very concerned, right? And it's not good when any organization get levied on the penalties. It's also the reputational risk that organizations carry. So guys, we have looked at the different aspects, and where that we have seen that one of the critical elements which was coming out is to take care of the name screening, right, of that individual customers or the entities, right? With that, I'll take a pause and I'll introduce Abhishek to guide us through the whole of process of the name screening and how is this very critical to ensure that compliance to the whole of the AML requirement. But before that, I'll just stop sharing and we'll see that if any questions are there, myself and Abhishek will try to attempt and then we'll continue. Okay, how do you assess MSME when it comes to entire the credit life cycle? I think a non-individual you are trying to, I think Abhishek, when you are going through the name screening, you will be also talking about that non-individuals also, right? So we'll probably cover that, guys, during that Abhishek sessions. How the practice,
Maybe I can just quickly say here. So there are a couple of questions that are, some of them are relevant to AML, some of them are not relevant to AML. Anything that comes under credit rating or credit risk is considered and taken up separately in most cases, and it is considered separately and apart from AML and financial crime requirements. So the risks associated with credit are primarily financial in nature or could be reputational in nature. The risks associated with AML and financial crimes are primarily regulatory in nature. So when the risks associated with regulations are concerned or AML and financial crimes are concerned, is linked to whether or not there is the potentiality of risk linked to money laundering, financial crime, sanctions, PEPs and others. But they may or may not directly play into how you rate them from a credit worthiness point of view. So I would say these two are separate, and when we look at credit related decisions, you keep them separate. The final decision of whether or not to sanction a loan or sanction a particular customer can be a combination of both of these two elements, which is their AML risk and their credit risk. So you will have to take them separately. This is just to kind of give you a little background into how you would manage it. There is one question, if I see this as how are PEP sanctions being implemented for NBFCs as it's more form compliance at this point. So to quickly take that up, when it comes to NBFCs or when it comes to banks or when it comes to financial institutions in general, there are two areas where you would look at AML compliance, which includes sanctions, which includes PEPs, which includes certain country watch lists and others. One at the time of onboarding and one at the time of ongoing monitoring. And for this, there are a couple of elements that you should have in your program. One is name screening. Second is transaction monitoring. Third is due diligence. Fourth is ID verification. Fifth is regulatory reporting. And running all of this, it has to be run based on a risk-based framework. Now, to your point, how are they being implemented? Because right now, more from a compliance point of view, you're absolutely correct. The aim of AML compliance is not to determine if money laundering is happening or not. The aim of AML compliance is to ensure that you're compliant with the regulations and government expectations. So there, the implementation really happens by having the right screening system, the right transaction monitoring system, having a due diligence process, having an ID verification process, making sure that you are able to do regulatory reporting, which is STR, SCR filing, making sure all of this is run by your risk-based framework, and the entire program is covered with by your AML policies. That's in a summary what it is. It is a deep subject, so I won't sort of go into the details, but those are the elements that need to be in place. Sorry, Shashank, please take.
Yeah, so Abhishek, I think thanks. I think picking up a few questions. So guys, we'll pick up a few questions again. Meanwhile, we'll just get started with the Abhishek session, and request you all to share your feedback. Team is sharing the feedback form into chatbot for the sessions. Please share your feedback. It's always very helpful to us. Keeps on helping us to improve. So please do that. And those who share that feedback, we share back that entire deck with you guys. So Abhishek, over to you. Just get started.
Sure, thank you. Let me share my screen quickly. Okay, please let me know if you're able to see my screen.
Yes, sir. Yeah, Abhishek.
Super. So as I alluded right now, there are a bunch of elements when it comes to the AML program. Quickly do a recap. There is name screening, which is a screening platform. There is transaction monitoring. Connected to that is risk rating. There is due diligence, where you have to do deeper due diligence on a customer. There's ID verification, which is at the beginning of the entire process. Then there is regulatory reporting, which is STR, SCR filing. All of this is run based on a risk-based approach, where depending on the risk assumed by a customer, based on their background and their profile and other things, you may define whether or not it is a high, medium, or low risk customer, having the right AML policies in place, and then making sure that your people are trained. These are the 8-9 different elements of a framework of a AML program. Today, we're going to talk only about name screening. And the reason why we're going to talk about name screening is because it is a foundational element of any AML program. And name screening is also very relevant when it comes to the India requirement. One, because the average customer in India has, or rather the average regulated entity in India has lots of customers. The average transaction size may be low. Number two, the regulations, as we will see right now, especially with the master direction, AML KYC master direction, have changed and now necessitate certain changes in name screening. That's number two. And number three is that the number of lists and requirements also that go into name screening also change. So it's important to understand why name screening is important. So what is name screening? Name screening is simply the process in which you take customer information and you compare it against lists like sanctions, PEPs, adverse press coverage, country watch lists, and others to determine whether or not your customer is part of those lists or not. And depending on whether they are part of that list or not, you may either have to stop doing business with them, like in the case of sanctions, or you may have to tag them as high risk, or you may have to take an internal approval for doing business with them. Right? With the exception of sanctions lists and certain lists like the Al-Qaeda list and maybe NIA list and others, if the name of a customer does pop up in another list, it does not mean that you stop doing business with them. What it does mean is that you appropriately risk rate them and then accordingly take the processes, or accordingly you take the approvals internally. That's really what it is. So that's name screening. Moving on. Why is name screening important? Name screening is important because we are really moving from KYC to KYX. What does that mean? It means the best practices that are being applied to name screening under KYC, which is know your customer, is being applied to KYX. And what is KYX? KYX is really know your vendor, know your supplier, know your employee, know your investor, know your third party. So basically, X can be substituted for any alphabet there. And that is the reason why name screening has become even more popular and more in demand. Because the best practices for know your customer are moving to KYX. Know your X meaning any of these alphabets. When we look at the regulatory obligations, name screening is now something that is more or less globally required. So all major economies, all major AML following, norm following organized countries and territories and domains all require name screening to happen in one fashion or the other. There are slight changes. Those slight changes can be what lists should be added in them, how name screening could be done in them, what are some of the best practices related to name screening. But name screening as a platform and technology is used across multiple countries, especially the G20 countries, and across different use cases, and within different use cases across different types of regulated entities. So there was a time when they were only used in banks, and now they're using banks and fintechs and payment providers and payment processors and NBFCs and insurance companies, so on and so forth. So the regulatory obligation is that it is going to be used across the board. Let's talk about really what is the name screening process. The name screening process has got 6 steps. First, you identify what is the target entity, what is the name that you want to screen. The second step is when the name screening actually happens, which is a matching algorithm process. Third is when a result is generated of whether there is a potential hit or not. The fourth is where you review it and then you disambiguate whether it is a true positive or a false positive, which means is the alert a relevant alert or is it an irrelevant alert? Depending on whether it is an irrelevant alert or not, you escalate it. You escalate it either to a level 1 review or a level 2 review or to your chief AML officer or chief compliance officer. And then depending on what the investigation says, you have to report it as a SAR or STR. Globally, it's a suspicious activity report. In India, you report it as a STR. That's really in summary what the name screening process is. There are many, many small factors around it. And to talk about it, I will tell you what the best practices are. The best practices can be encapsulated in all these elements, and we will cover all these elements, right? What you will also see, and this is something that we are doing especially for this webinar, is that we are making sure that when we show you what the best practice is, we actually show you what that looks like on our screening platform. So ZIGRAM has a screening platform called prescreening.io. You will see the screenshot of that and what it means to apply that best practice within the platform. Let's start with name and alias. Name and alias is very important because I think a lot of people get this wrong, where if you don't have the right name of a customer or the alias of a customer, it could mean that you don't get the right outcome. So on the right-hand side, what you see here is a screen. This screen has the actual application or the actual platform called prescreening.io that is used. You would have to apply or add the name of a company or an individual that is there. And you have to make sure, number 1, that the name is correct. Number 2, you're using a full name. Number 3, you're using aliases, which is also known as names. And we are not using one-word names, short name, abbreviations, common names, because all these things will lead to what is the issue of GIGO, garbage in, garbage out. You will get lots of false positives. You'll get the wrong results. So making sure that your KYC systems are capturing the right information, the right customer information name is very critical. If you don't have it, if you have single word names, if you don't have the right name, if you have names that have got the wrong spellings, you will get the wrong input. You will get the wrong output. So the first best practice is making sure that your name and aliases are correct. Okay. Moving to the next one. The second is country. So when you have to write an input, you don't just add the name of the customer. You also add the country that is relevant to the customer. Now, why do I say country that is relevant to the customer? Because there are different types of countries that could be relevant. There could be country of birth. There could be a country of residence. There could be a country of nationality. There could be a country of registration. And there could be actually a combination of these. There have been customers, especially when you look at wealth management use cases and others. There is a customer who may have been born in India, may have the nationality, which is Canadian, operates out of Spain, also works out of India, and has a factory, say, or has a business interest in the US. In this particular case, you have to add in 5 different country names. Why do you need to add 5 different country names? Because if you don't add a country name, it does not trigger the relevant lists of that country. Because when a screening solution works, it doesn't search across all countries. It only searches the lists against the specific country that you mentioned. Otherwise, you end up getting too many false positives. So adding the right country is very important within a system. The next is what? Entity type. Entity type means entity could mean, is this name an individual? Is this name an organization or a company? Is this a vessel? Very important. Again, because then it will search the relevant lists. Some lists have only companies. Some lists have only individuals. Some lists have only vessels. Then it searches that. Why am I saying that? For example, let's say that the name of a person is called Alpha Brown. That's the name of a person. Or let's call the person James Black. If the name of a person is James Black and you don't tag it as an individual, the system may look at a record which is James Black Private Limited and match both of these, even though one is a company and one is an individual. So it's very important to add what the entity type is there. Then the next is what? The data on birth is very important, right? What is the data on birth? The data on birth is, you're not just adding, in this case, the birth date. You're adding year, month, date separately. It could be a registration date. If you see on the left-hand side, the example, why is that important? It is important because certain lists like PEP lists, sanctions lists, certain other lists, you may get a name match. Like in the case of Sitanshu K.R. Roth, you got Shitanshu Kumar Roth. There is a 94% match score against the name with a fuzzy logic name. But when you looked at the date of birth matched exactly. So you got a potential name match and you got an exact date of birth match. That increases the probability that it is the same person whom you're looking for. So date of birth is actually very important. And the more relevant and more accurate the date of birth you will get, the better the outcome is you will have. The same logic is for additional identifiers. Why are additional identifiers important? Because not every list has a date of birth. For example, in India, the NIA list, the MCA lists, the SEBI lists, some local regulator lists don't give you date of birth. They will give you other identifiers. They'll give you company name, they'll give you maybe BIN number, PAN number, Aadhaar number, nationality, sometimes email addresses, others. So what that means is the richer the customer information I can get, name, date of birth, designation, company, DIN number, PAN number, and others, the higher the probability is that I will be able to get a true match and reduce false positives against other lists. So the better the input, the better the output. That's why additional identifiers are very important. What is the next thing that one has to look at? What lists are we supposed to screen against? These are called screening lists. Every check that you have to do does not have to have the same set of lists. They may differ. Why do I call that? Let's say you're trying to onboard a vendor or a supplier. You may want to do far more checks there because of the criticality of the supplier or vendor. But let's say if you're giving a micro loan to a customer and there your threshold or your exposure is only, say, 1 lakh rupees or 50,000 rupees or others, there you may want to do only what is required by the government of India, which is PEPs, certain global sanctions, and 1 or 2 India watch lists. That's it. So knowing what list to search and not just going across and selecting all lists that need to be searched is very important because it leads to better results, better outcomes, lesser false positives, and faster processing. So knowing which list to get to sort of select is important. Now, I must caution you here that not every screening system out there will give you the ability to select or pre-select a list. And that is exactly why when you look at, say, an application or platform like prescreening.io, that is a very critical feature. So if you have another screening platform like that, it's very important for you to make sure that these screening selection criteria is there. So what are the kind of data assets or lists? Number one, can you check for PEPs in India? Should you check for PEPs? The answer is yes. Regulatorily, you have to do foreign PEPs, but mostly now best practice is to do all PEP checks. Global sanctions, what is important is UN sanctions. That's the critical one, but people also go for US OFAC, European Union, UK HMT, and in certain cases AU DFAT. Those are the sanction lists that are considered critical. Within country-specific watch lists, people are going for NIA for sure. Those are critical. And in addition, RBI and MCA, those are considered important. But it really depends on what is the risk that one is willing to take. APC is not mandatory in India. Adverse press coverage is not mandatory. People are doing it because it is considered best practice, and also because from the perspective of global requirements, negative news coverage for a target entity is considered a best practice to go after.
So maybe Abhishek, I think so we have covered pretty good, and some of the questions are also coming in a very similar line. The screening, maybe
Sure.
we can just pick it up.
Sure.
I think many of them you have already covered because it came before you started the session. So what are the other info is required to screen name? Rishabh is asking, along with actual names, is there maybe exact similar? I think you all spoke about like date of birth, the country, and other elements, right?
So maybe I'll cover that. In addition to the name, you should have date of birth. You should have a set of identifiers: PAN number, DIN number, Aadhaar, not so much Aadhaar number, but PAN number and DIN number, those two. Now people are increasingly also using phone numbers and email IDs. The combination of these usually means that when I search for in a list and I have a combination of these inputs, we are able to get a unique individual as a hit. So those are considered best practice. Now, depending on your organization and your KYC systems, you may not be capturing all of these, but that is the best practice. So that is one. The second question, I think just on top of that is, kindly suggest the name screening required for applicant only or for beneficiary owner, or also for key management personnel / list of partners as well. So when we have, say, kindly suggest the name screening required for applicant only, the name screening logics used for what we call target entity or associated entities, which could be UBOs, which could be a company, which could be beneficial owner, others, are supposed to be generally exactly the same, which means we don't make a difference between them simply because we want to know what is the risk. The risk associated with an associated entity can also flow to the main entity, right? So when it comes to, let's say, our beneficial owners, we have to do sanction checks. We should do PEP checks. In certain cases, we do adverse media. We should look at India watch lists, the same thing that we do for target entities. So to your question, the best approach that can be defended in front of a regulator is that, depending on whether you're doing onboarding or ongoing monitoring, keep the lists more or less the same. So that would be my my input there. Above that, Lalit Sharma asks, how do we control laundering in wallets and PPI where we have limited data available during online registrations? When we, I'm going to separate these two. I'm going to separate two parts to this. One is the issue number one is banks and regulated entities aren't expected to be investigators of money laundering. Investigation for money laundering, and therefore its curbing and stopping, is a mandate for the agencies of the government of India. Our job as banks and regulated entities and as AML professionals is to make sure that we have the right compliance processes, we have the right regulatory processes, we have the right technologies in place, so that the end reporting that we do which is in the form of STR, SAR, CTRs, and others, help our investigative agencies to do the investigation and therefore stop this. Now, therefore, with that in mind, I think the right question to ask, which I'm sure Lalit is also asking, is how do we make sure that name screening can be done appropriately and accurately, given the fact that we have very limited information? We just got a name and we've got identifiers. So I would say what we do is considering that the value in wallets and PPI is much lesser. There, you can increase thresholds of name matching logics, so that you get more or less, if you get an exact or similar sounding name, and you have maybe one more identifier, maybe you've got a PAN number, or maybe you've got a date of birth or others, that matching can help you manage the number of alerts that you get, which you can then go out and report to the regulator. That's how you do it, and that's why the risk-based approach is also applied as a pointer.
Yeah. So Abhishek, what we'll do that we'll again come back to your session, and then again at the last we'll pick up more questions. So Udit and others will come back. We are not going away. We'll respond. So maybe let Abhishek complete his session. Before that, again, I have a very sincere request, guys. Please share your feedback. Team has just put on the feedback form into the link. Please share your feedback. Thank you. Abhishek, continue, please.
Sure. So coming back to the presentation, today it is important to have not just global sanctions, PEPs, and adverse media, but also to have a good coverage and a partner, a screening partner that can offer you lists from lots of other countries. Why? Especially when you have cross-border transactions, especially when you've got cross-border customers. At ZIGRAM, we've got close to about 1,000 lists globally, which ensure that whether you're dealing with the Middle East, whether you're dealing with Africa, whether you're dealing with Singapore, Asian countries, Europe, or otherwise, there is always coverage. That not just gives you coverage on AML, but also reputation. So it's important for that. That being said, India country watch lists are critical. In India, we've got now about 190 lists in India. That makes us the most comprehensive list provider in the country right now. And what that does is it makes sure that whether you have different types of regulated entities, different type of group companies, different type of regulatory requirements, they can all get covered in one system. Having access to the right lists for your name screening is very critical. Because if you don't have the access to the right lists, you may just not have the right coverage. And if these lists are not updated regularly, you could be non-compliant. Okay. Moving on. Let's talk about adverse press coverage. Adverse press coverage, when it comes to AML and financial crime, does not mean that every negative news is considered relevant for AML and financial crime. An example of that is on the right-hand side. There are two stories here. The first one is related to a fraud, where CBI has raided 12 locations. And the second one is related to how, couple of people, which was in here, probably Amitabh Bachchan and Anushka, were fined by the traffic police because they weren't wearing helmets. Now, both of them are adverse news. Both of them are negative in nature. But the first one, because it has a financial crime angle to it, is what is relevant for AML and financial crime. The second one is not. This is critical because you don't want to get too many negative news that you have to read through. And that's why having the right framework in place for AML is very critical. And that is really what we have as part of adverse media within ZIGRAM. So making sure that you get the right coverage of adverse news, that you don't miss out anything, but also that you don't have too much adverse news that is not relevant is very important. Then let's talk about list updates. List updates are important because unless and until your critical lists are not updated regularly, daily, you could be non-compliant. This is especially true for sanctions. Sanctions lists have to be updated every single day. And you have to check those lists every single day. Why is that? Because now you have to do daily monitoring. And what does daily monitoring mean? It means you have to check whether or not an existing customer or a new customer is part of a adverse or a sanctions list or a PEP list or otherwise on a daily basis. But what's the point of doing daily checks if your vendor or supplier for data is not giving you this information every day or is not updating and refreshing this information every day? So now the regulatory expectation from the government of India is that you have to monitor names of your customers against specific lists every day. But what that means is within your system, that data also has to be changed every day. So if your data or if your sanctions list, if your NIA list, if your WMD list and others are not changing, and on the left-hand side, you will see what the Indian regulatory requirement is. For example, ISIL, Daesh, and Al-Qaeda sanctions lists have to be checked every day, which means data has to be checked, updated every day by the vendor. Taliban sanctions lists have to be checked every day. UN sanctions lists have to be checked every day. UNSCR 1718 sanctions lists have to be checked every day. And your WMD list has to be checked on a periodic basis. The assessment is that means every day. So lists have to be updated every day. Then let's talk about name matching. This is a question I know that has come in. Hopefully this should give you some idea. Global best practices that the name matching logic that is applied for name screening is using fuzzy name match logic. But within fuzzy name match logic, two algorithms are a combination of two algorithms either at the base level or as an enhanced level are used. The first one is called the Levenshtein distance algorithm. The second one is called the Jarrow-Winkler distance algorithm. These have to be deployed. And then you have to make sure that there are many complexities within the name matching logic that you should be able to solve for. For example, let's say I put in my name, Abhishek Bali, and then I switch the name as Bali Abhishek. It should be able to give that as an exact match. Similarly, cultural variability is names. Some places where I add an EO or versus O, AIGU versus AIGUE. These are French and African names that have some differences. It should be able to match that. Phonetic similarity between, say, Elizabeth and Elizabeth. One has Z, one has S, should have a match. Common names, transliteration, spelling mistakes, partial name matches. And name matching algorithm should have the ability to test these and should have the ability to give the right answers. I'll give you some examples over here. Eastman Chemical Company on the left-hand side and Eastman Chemical Company on the right-hand side. One is in the list, one is available in the user input. That's a 100% match. But let's say Agility Software Procurement Group on the left-hand side, Agility Software, and then there is an @ procurement group. There is one special character, so it's a 98% match. Contract 000 is one, and then there's contact 000, which is in one name. String repetition. Similarly, Capital Limited. Similarly, if you see, there are lots of small variations that end up coming. The name matching logic that you are testing in your system, that should be there in the system, should be able to match these and should be able to also throw what is the percentage match. This is a best practice globally. And so if your systems are not doing that right now, my recommendation would be is to see what you want to do next. Because these are considered best practices and regulators regularly go after the screening systems to check whether these are there or not. Next step is disambiguation. Okay, now that I've gotten an alert, there is an alert, I've gotten a name alert. What do I do next? That process is called alert disambiguation, which is effectively you investigate whether an alert is relevant or not. So for example, in this example, there is an exact match. Now, the reviewer or an analyst has to sit down and say whether it is a true positive, which means, yes, the alert is relevant, or is it a false positive, which means, no, the alert is not relevant. And you have to give reasons for it. This act of investigation and determining whether an alert is true positive or false positive is called disambiguation. And the faster you can do it, the better it is. The more accurately that you can do it, the better your reporting to the government of India is going to be, to the FIU is going to be. This is essential. So it's not just important just to get an alert, you have to act on the alert. This is an example. On the left-hand side is a false positive. On the right-hand side is a true positive. Now, this is the exact same case for Marshmallow Corporate Solutions Private Limited. On the left-hand side, we can say no hit was found. Why was no hit? Which hit was found? If you read the comment, it says the subject was mismatched because the name was the same, but the SIN number was different. So it can't be the same person. But on the right-hand side, we've changed it and said the name was the same and the SIN number was exactly the same. So the left-hand side one, in this case, you will tag it as a false positive and not report it going forward. On the right-hand side, you will tag it as a true positive and then escalate it further to see whether it has to be reported as an STR or not. That's called disambiguation. Then we've got reporting. So you can download reports. Are you able to download a report? And then most importantly, are you able to generate and push out a SAR report to the FI versus FinNet 2.0? Right now, many of you may be having challenges with FinNet 2.0 because of the change in formats and others. That should stabilize over a period of time. But ultimately, from the aim of doing transaction monitoring, the aim of doing due diligence, the aim of doing as name screening is to be able to submit a STR or SAR to the FI. And this is global. So the system should be able to enable that for you. The other best practice is case screening. Now, this is relevant when you're doing UBOs and associated entities, which means, does your screening platform allow you to check only one name at a time, or can it combine names? And combining names is important, especially when you're doing UBO assessments for organizations, because then you can get not just different types of scores, you can get one composite case score. This makes it easier for you to track different scores, to disambiguate them, and to also settle the cases. As we get into the final set of things, the other thing that the screening solution should have is an audit trail, because when the regulator comes calling, or internal audit happens, or regulatory review happens and others, you should be able to go back and look at the audit trail of every case to see when was it first checked, when was it second checked, when was the outcome there, when was it read, when did it get disambiguated, so on and so forth. When was the rerun done, when was it not done? This is important. The audit trail ensures that there is accountability, there's transparency, and that for every name that you put in, do you have an audit trail there? The other critical requirement that is coming globally has to do with ongoing monitoring. Now, ongoing monitoring was always there in the more developed parts of the world, but starting this year, as I was shown you as part of the lists best practice, as per the latest updates that happened in May and now also in October, the regulatory expectation is now that there will be ongoing monitoring for customers, which means daily monitoring. So a system should not just do monitoring at the time of onboarding or at the time of re-KYC, but every single day. And what that means is, it has to have the ability to check every name every day and only give you the alerts that are relevant. This has really changed things within India right now. And I think this is very important for you to do the assessment. Next is, one has to be able to do KYC updates and push them into the platform, because where we are right now is that if there is a small change in terms of country, if there is a change in terms of risk rating, if there's a change in terms of city, you should be able to push that information into your platform. And then a refresh should happen. So how well are you able to push out updated KYC information into your system is also going to be important.
Abhishek, maybe quick time check.
Sure.
So maybe you can just quickly cover, and
yeah.
So we can just respond to some of the questions.
Sure. Okay, so guys, of course you'll be getting this presentation as well, so you can always reach out to us separately. Workflows are important in screening, because you're not just checking it at the time of before alerts, but also after alerts and across multiple different levels. This has to go to the MLRO for sign off. The system should be able to check across different use cases. These are the different use cases that are there. It's not just for the ML compliant, but also for pre-proposal check, employee checks, payment system providers, stakeholder screening, and others. Regulatory updates, I think, have been very clear. In May of 2023 and October 2023, there have been clear mandates. April, May, and October have clearly aligned to the fact that name screening is important. And number two, it has to be done daily. So what are the key takeaways? And then I will end my session. garbage in, garbage out. If you don't have the right inputs that are coming in, you will get low quality outputs, and that will lead to more problems for you. So system where you can put in all the high quality information will give you the right high quality output. Daily monitoring is now baseline expectation. Has to be done every day. Number 3, technology shift has happened. Agencies, regulators, and governments now expect you to have specialized systems for screening. I know a lot of you may have exposure to platforms that do everything. That is not the direction that the world is moving in. The world is moving in the direction of specialized system because it enables them to have regulatory coverage. So that is why. Next is it has to align with your risk-based approach. Number 5, you should have the ability to configure what lists and data you need to have. Number 6, focus on ear to the ground, which means your system should have the ability to explain an outcome, should have audit capability and repeatability, which means if you put the same settings, you should get the same outcome over and over again. So whenever you're assessing a system, whenever you're assessing a screening system, it should have the ear abilities, which is explainability. Everything should be explainable, auditability, and repeatability. Case management workflows are important because your entire team should work on one system. L1 review, L2 review, L3 review, sign off, input, output. Different users should be able to use it. You have to move away from one platform to specialized solutions. I think I've just covered this. That is really where the world is moving towards, because the ultimate focus is not to have one platform for everything. The ultimate focus is to make sure you have a specialized solution for everything. Your system capability assessments are important. You should run a system capability assessment every year if possible. And the same system should allow you to do from KYC to KYX. I know I've got more slides, but I will stop here. These are the main key takeaways, and I'm happy to answer any questions that you may have. I'm going to stop sharing.
Yeah, thanks, Abhishek. Pretty interesting, right? It's contextual. So we'll just pick up the questions. I think I'll try to put up the order. So Rishabh is asking again, continuing, can we tweak the name match fuzzy logic?
Yes, you can. You can tweak the name match fuzzy logic based on thresholds. And this also depends on system to system. Some systems don't allow you to do it, but you can define at what threshold do you get a high match, what do you get a medium match, and what do you get a low match. The best practices ones are those where you can have different lists or different checks have different thresholds. But yes, you can.
And very similar questions. Udit is also asking, does the ML software have a fuzzy logic for name matching? Also, does it match address also in similar manner? Very similar questions.
Yes. So yes, it does have fuzzy logic. Can it match addresses? The answer is yes. Do most people use it for matching addresses? The answer is no, because I think there are lots of elements in an address. Also, most lists don't have an address feature. So even if you put in an address, there's nothing to match it against. And sometimes the addresses are also very different. So can it do it? Yes. Do most people do it? The answer is
no. Yeah. I'm picking up the question, which is more contextual to the name screening. So that's why. So Aditya is asking as a pretty long question. Given the quality of data collected directly influences the number of false positive, I'm assuming all positives have to be investigated by human. What are the best practices being encouraged, giving literacy and available government data like single field name and the hinterland? So I think you have the answer, but maybe you would like to pick it up.
No, absolutely. Best practices, yes. True positives have to be all hits have to be reviewed. Now, what you can do is you can create a simple rule for a certain number of hits. Let's say if a name matches, but the date of birth does not match at all, that can be a simple rule that you can auto close certain alerts for. Because if the same rule is going to be followed by an analyst, and the same, you can effectively automate that rule. So the answer is you can do that. Now, that is one. Second is when it comes to single names, unfortunately, there is no great solution to that. So my recommendation always there is single names should always have multiple identifiers with them, because there has to be then a rule created for single name. It says, all right, if I get a single name, then the match score for that should be separate, and I should depend more on the identifier and less on the name. So that is the answer. My experience has been is sometimes when people put in single names and don't put other initial identifiers, that is a challenge at the KYC capture level and not so much of a screening level. So you may not get impacted at the from a regulatory point of view at the screening level, but you will get impacted at the KYC level because too many single names with no identifiers matched to them is probably a red flag. So I think that's how we go around that.
Thanks, Abhishek. And again, before I pick up another question, request everyone to please share your feedback. Those who share feedback, we share back the deck with those guys. So please share your feedback. It's also always help, encourages us to keep on coming back with the session, guys. So again, sincere request, please put your feedback. Thanks. Arpit is asking, Abhishek, is the screening required for high-risk transaction customer for an aggregator, or is it only the direct merchant of aggregator? I'm not sure. Is it clear, or should we?
No, so I don't know this specific case, but I will tell you this. I think the trend is quite clear. If based on reality, law, and assumption, if a particular person is considered a customer, whether it is direct or indirect, it has to be screened. Now, when it comes to aggregators, especially when it comes to transactions, I think increasingly the regulatory the expectation is that it is also screened at the aggregator level. And it is not just left to a bank at the end of the day, which is the reason why if you are, let's say, a big aggregator, whether you're PayPal, Paytm, whether you're a processing aggregator, others, that expectation is quite clear because you have to do transaction monitoring, and the component of the transaction monitoring associated with that is name screening for high risk transactions. So the expectation for that specific case is this, because the regulatory view is that that is your customer, and therefore you have to take due care, and due care means you have to do name screening.
Thanks, Abhishek. So due to time constraint, we'll pick up a couple of more questions. Abhishek, hope it's okay.
That's fine.
Yeah. So Udita is asking, if the target list itself contains only name and address, how will the software get a perfect match here? Other information like DOB, PAN, phone number is of no use.
Yeah, well, that's a good question. The answer is you will not get a perfect match. Yeah. And that is exactly why you need to have different fuzzy name match logics and different business rules for different types of lists. Because if you apply one fuzzy match logic for sanctions, it will not be applicable, say, for the MCA list, or say for another list. Let's say there's a Delhi police list, for example. You will not get that. So you will have to have different thresholds. Now, what is the threshold based on? The threshold is based on back testing. So how we would, for example, do it is you will give, let's say, 5,000 of your customer names. We will run them against all these lists. We will see at what stage and at what threshold do we get the right kind of responses. That's called back testing. And then based on that, we will create the right thresholds, and then you'll be able to move forward. So will you get a perfect match? Answer is no. Do you get a perfect match in most places? Answer is no. And that's why your data input and your system should have the nuance to be able to do it.
Thanks, Abhishek. Maybe we'll pick up the last one, and which is pretty interesting also. Does the ML software have an API integration available with well-known LOS system? And I think it can be extended with any onboarding journeys platforms, right?
Absolutely. So we probably have the most extensive API integrations currently. We are integrated with a number of ID verification providers. We are integrated with a number of KYC platforms and others. This API integration is extensively used for onboarding. And so the answer is yes. In fact, most advanced platforms will offer you fairly nuanced, advanced, progressive APIs to be able to do API integration at the name screening level.
Yeah, perfect. I think with this, we come to an end, guys. Again, request everyone to share your feedback. And thanks for basically listening to us, participating in the knowledge session. I think it was enriching for me also. Thanks, Abhishek, for taking out time and spending with the participant and sharing your knowledge with an email best practices, especially around name screening. Thank you very much. Thank you.
Thanks, Shashank. Thank you, everyone. Thank you. Have a great day ahead. Take
Thank
care.
you. Thank you, guys. Bye.